If you want to survive in trading long enough to make real money, there is something strange you learn. The market is not mainly trying to test your strategy. It is testing your mind. Most people enter trading believing the battle is external. They think the enemy is volatility, the economy, the news, the broker, the smart money, the market makers. But after enough years, after enough losses, after enough nights staring at charts, wondering what went wrong, you realize something uncomfortable. The biggest threat to your capital was usually you. Not because you were stupid, because you were human, and human psychology becomes expensive when money is attached to uncertainty. I learned that slowly, not in one dramatic moment, not in one life-changing trade, but through years of tiny emotional mistakes. A revenge trade here, a missed stop there, a forced entry because I was bored, holding a loser because admitting I was wrong felt worse than losing money. At first, those mistakes looked small, but over time they revealed something bigger. Capital is not only protected by technical skill, it is protected by mental habits, habits that stop you from becoming dangerous to yourself. That is what this is about. Not the perfect setup, not secret indicators, not prediction. These are the 10 mental habits that protected my capital for 10 years, and almost every one of them was born from pain. Habit 1. I stopped needing to be right. In the beginning, I confused trading with intelligence. I thought a winning trade meant I was smart. A losing trade meant I was wrong. That sounds harmless. It isn't. Because the moment your identity becomes attached to being right, you stop behaving rationally. You stop taking clean losses. You move stops. You hold losers longer. You start arguing with price. You search for reasons the market is wrong. And now your ego has entered the trade. That is when capital becomes vulnerable. I remember one trade years ago. Everything looked perfect. Structure aligned. Momentum aligned. The setup looked clean. I entered with confidence, then price moved against me. Not violently, just enough to tell me the market didn't agree. My stop was close, a small planned loss. But I didn't take it because something in my head said, no, it will come back. That thought had nothing to do with analysis. It had everything to do with pride. I widened the stop, then widened it again. That small loss became a painful one. And what hurt most wasn't the money. It was realizing I had not lost because of the market. I lost because I needed to be right. That was one of the most expensive psychological lessons I ever learned. A trader does not need to be right. A trader needs to survive being wrong. That changed everything. Now, when I place a trade, I am not making a prediction about my identity. I am placing a probability, and probabilities fail. That's normal. The moment you accept that, your mind becomes calmer, and calm protects capital. Habit 2, I learned that boredom is dangerous. People think fear and greed are the biggest emotional enemies. Sometimes they are, but boredom can be even more dangerous because boredom looks harmless. No panic, no excitement, no dramatic emotion, just restlessness, a quiet urge, a feeling that you should be doing something. That destroyed a lot of my money in earlier years. I would sit in front of charts for hours, nothing clean, nothing obvious, no real edge. But after staring long enough, the mind begins to invent opportunity. You start seeing patterns that aren't there. You become impatient. And then the internal dialogue begins. Maybe this could work. Maybe early entry is smarter. Maybe I'll catch the move before everyone else. Most bad trades don't begin with greed. They begin with emotional discomfort, the discomfort of waiting. And many traders cannot tolerate waiting. They need stimulation. The market becomes entertainment. That is dangerous. One of the strongest habits I built was learning to do nothing. Not because doing nothing feels good, because doing nothing is often profitable. A trade avoided is sometimes capital protected. I learned that flat is a position. No trade is a decision. And sometimes the most disciplined thing you can do is close the chart. Habit 3, I stopped trying to make back money quickly. Losses distort perception, especially emotional losses. You lose one trade, then suddenly your brain changes. Now you don't want a good trade. You want recovery. And recovery is dangerous because urgency enters the process. You stop seeing objectively. Now you're trading emotionally. You're trying to repair pain. That is revenge trading. And revenge trading feels rational while it's happening. That's the trap. I know that feeling well. You take a clean loss. Then you stare at the chart thinking, I can get it back. That sentence has destroyed countless accounts. Because now the next trade isn't about edge. It's about emotional relief. And emotional relief makes you aggressive. Bigger size, worse entries, lower standards. The mind becomes narrow, and once that happens, capital becomes exposed. One habit changed that. After a loss, I stopped focusing on recovery. I focused on stability. That meant slowing down. Sometimes stepping away. Sometimes trading smaller. Sometimes no more trades that day. The goal became emotional neutrality, not fast repair. That habit alone saved me more money than any strategy. Habit 4. I learned that risk feels different when money matters. Paper trading lies. Demo accounts lie because fake money does not trigger real psychology. Real money changes the nervous system. Suddenly your heart reacts. Your breathing changes. Your thinking narrows. A perfect setup becomes emotionally complicated. And that is where many traders discover something uncomfortable. Their strategy was never the problem. Their emotional response to risk was. I learned that position sizing is psychological, not just mathematical. If risk is too large, objectivity disappears. You become attached. You watch every candle emotionally. You interfere. You micromanage. You cannot think clearly. That taught me something simple. Never risk so much that you lose mental clarity. Because once emotional pressure rises above your ability to think, your edge disappears, small enough to think clearly. That became one of my most powerful rules. Habit 5, I stopped confusing activity with progress. This one took years. In the beginning, I thought more effort meant better results, more charts, more trades, more screen time, more indicators, more analysis. But often it only created more noise. I wasn't progressing. I was just increasing stimulation. A strange truth about trading is this. The most profitable traders often look less busy. That bothered me at first because the mind wants action. It wants effort to feel visible. But markets don't reward visible effort. They reward quality decisions. I had days where I traded all day and lost money, and days where I took one trade in 20 minutes and made more. That forced me to ask a hard question. Was I trading, or was I just trying to feel productive? Those are not the same thing. Once I understood that, my process became quieter, more selective, more patient, less emotional fatigue. That protected both capital and mental energy. Habit 6. I stopped letting one trade define my mood. This is subtle, and it matters more than people realize. Early on, one winning trade made me overconfident. One losing trade made me doubtful. My emotional state kept swinging with outcomes. That creates instability. Because when mood follows results, behavior becomes inconsistent. And inconsistent behavior creates inconsistent performance. I had to separate outcome from identity. A single trade means very little. It is one event in a long sequence. That sounds simple, but emotionally it takes practice. Now, after a win, I don't celebrate too much. After a loss, I don't dramatize too much, because both emotional extremes can distort the next decision. Calm continuity became the goal, not emotional reaction. That mental stability preserved capital over years. Habit 7. I learned to recognize when I was not psychologically fit to trade. Some days the charts are fine, you are not. That matters. Fatigue matters. Stress matters. Conflict matters. Sleep matters. A distracted mind sees different things. An irritated mind behaves differently. An anxious mind forces trades. A tired mind makes lazy decisions. And the dangerous part is this: most traders still sit down and trade anyway, because they think discipline means showing up no matter what. Not always. Sometimes discipline means knowing when not to engage. There were days I opened charts and immediately knew something felt off. Not technically, internally, rushed, irritated, restless. Years ago, I would ignore that. Now I respect it, because psychological state changes decision quality, and decision quality protects capital. Habit 8. I stopped needing constant certainty. This one changed my entire relationship with markets. Human beings hate uncertainty. The brain wants prediction, it wants control, it wants certainty before action. But trading doesn't work like that. There is never complete certainty, only probabilities. And traders who cannot emotionally tolerate uncertainty become vulnerable. They overanalyze, they hesitate, or worse, they invent certainty. That creates false confidence, then oversized risk, then emotional damage. I learned to become comfortable with incomplete information. That does not mean careless. It means accepting that uncertainty is part of the business. You can have a good setup and still lose. You can have imperfect clarity and still win. That acceptance reduces emotional friction, and emotional friction often costs money. Habit 9. I learned to protect energy, not just capital. People underestimate mental exhaustion. Trading drains decision-making power. Every chart, every evaluation, every impulse resisted, it all costs energy. And when energy drops, discipline weakens. That's when impulsive trades appear. That's when rules become flexible. That's when just one more trade happens. I used to think only money needed protecting. Now I know attention, clarity, and emotional energy matter just as much. Some of my worst trades happened late, not because the setup changed, because I changed. My mind became tired, and tired minds become expensive. So now I protect energy aggressively. Breaks, limited screen time, clear boundaries, and that preserves better decisions. Habit 10. I started thinking in years, not days. This may be the most important one. Most traders think too short. Today's trade, today's profit, today's loss. That creates emotional magnification. Everything feels huge. Everything feels urgent. Everything feels personal. But when I started thinking in years, everything changed. One bad day became small. One missed setup became irrelevant. One losing week became normal. That longer horizon created psychological space, and psychological space creates better decisions. My real goal stopped being make money today. It became still be here years from now. Because survival gives probability time to work, and time is where consistency is built. After 10 years, I learned something I wish someone had told me earlier. Capital does not usually disappear in one dramatic explosion. It leaks, quietly, emotionally, through impatience, through ego, through boredom, through urgency, through the need to feel in control. That is why trading psychology matters so much, because charts do not pull the trigger, your mind does. And over time, the traders who survive are not always the smartest. They are usually the ones who learned how not to become dangerous to themselves. That was the real battle. Not prediction, not mastery of the market, mastery of reaction. That is what protected my capital for 10 years. And if you stay in this long enough, you may discover the same thing. The greatest edge was never hidden in the chart. It was hidden in the mind that looked at it.